It
Nice
is.
to
I think
meet you
Facebook
too.
should have a get-together meeting for virtual friends to meet physically.
Yes, it absolutely should. And I see the plants next to you there. You carry all your things with you. Well done, Lilian.
I do.
So you're welcome. So please, I hand over the floor to you.
Thank you very much, Belinda. Nice to meet you. And good morning, everybody who is logged in this morning. My name is Lilian Katiso. Who am I? You didn't introduce me, so I guess I have the liberty to introduce myself.
Please, I left that to you. I think you best know how to introduce yourself.
Okay, fine, that's okay. So I call myself the accounting gardener. I think that's the name I started with out on social media. I'm an accountant by profession. I'm a chartered certified public accountant and also chartered certified accountant. And that's my profession. But I have a passion for gardening, which led to me starting turning my passion into profit, which is More and More. So I'm a proprietor of More and More, which is a garden center. Out of my profession, which is accounting, I also turned that into a business, which is Zadok Associates. Zadok Associates is a financial management consultancy firm. We do our passion is to help business owners like all of you logged in here to have mastery of your finances, because we believe if you have a very good going business, but your finances are not in good shape, then your business might not be sustainable. Yet I believe we go into business to build sustainable businesses. We believe we're going to business to build businesses of not just feeding us hand to mouth, but businesses that can be passed on to our children's children. So that's my passion, and that's what we do at Zadok Associates. So I run two entities, so Zadok Associates and More and More, and my sharing is going to be from both experiences. So I'm not just going to talk out of my professional knowledge, but I'm also going to just say how I've practically done it, how you can practically do it, and how my clients have been able to do it. So I hope that along the way, we are going to learn how to separate ourselves from our businesses. Okay. So if I'm moving very fast, you let me know. Belinda, I tend to talk a bit fast, but also there will be time for question and answer, I believe, at the end of it all. So now that I've said that my profession is accounting, so some of these things come from the basis of the accounting profession. Some of them we call, like now we're in the football season. Yes, we're now in the football season, so everyone is talking World Cup and all that stuff. I make fun that I can stare at the screen without understanding what's happening. So, but there are rules that guide the game. There are rules that make football a game that people enjoy. There's rules that determine who scores, which direction they score, and what constitutes a penalty or what constitutes whatever a good game. The same way in accounting, we have what we call the basic accounting concepts that helps us to run our businesses, not just in the financial terms, but when we follow these disciplines and concepts, they actually help us to run the business smoothly. And one of the accounting concepts is a separate entity principle, which we are going to talk about in detail today, but I'm just going to tell you what other concepts are. So there's a separate entity concept, and then there's a consistency concept. Now, I'm leaving the separate entity because that's what I'm going to dwell in for the rest of the minute that I've been given. But the consistency principle means that if you choose to track your records in a particular manner, you consistently do that throughout the lifespan of your business. So it is not like now today you're managing them in a particular manner, the next time you change. For example, you have an expense called communication, but next time you're writing them as telephone expenses. Another time you're writing them as, something different. So it will be hard for you to track over the period of your business, which expense, how is this expense performing over time? Am I increasing that expenditure line or am I reducing it? So let's say you have travel expenses. Next time you're tracking them as transport costs. That inconsistency makes it hard for you to understand the performance of your business and make informed decisions on how to improve and manage the costs. Another basic accounting concept that we look at is what we call accruals and matching. Now, to make it simple, what it means is you record the expenses in the month in which they're actually incurred, meaning that rent or you consumed electricity or water, they record in the month when you paid it, but you record that expenditure in the month in which, I think someone is interrupting my connection. In the month, can you still hear me, Belinda?
Yes, I
in
can
the month
hear you.
in the month in which you incurred that particular expenditure. And then for the money that you're receiving in your business, you record them even if the person hasn't paid you, but you've offered that service, you've offered that particular good, you record that in that particular time. Then the money concept, which is actually playing a big role in the separation principle. Now, for everything that you do as a business owner, do you convert the value of that into money? You've used your card to do deliveries. Did you convert that actually you've used a transport expenditure that you put in your business? Because some people think that they are making a profit, but they're just not recording the real expenses that are actually incurring in running the business. You give your time for your business. I've seen some of our clients, they run the business, but they don't pay themselves a salary. Now, the omission of your salary as a business owner makes you look like you, at the end of the day, you've made a profit, but you've just omitted your salary. So making sure that you monetize every expense or every transaction in your business plays a role in accounting concepts. And then the double entry principle, which is also going to guide my discussion today, to mean that for every money that comes into your business, you have to say, where did that money come from? For any money that leaves your business, where did that money leave to go to? Okay, I'm not going to make it complex in accounting. I'm going to try to make it as simple as that. But now what happens is we deviate from following those basic concepts, and we have some mistakes that we do as business owners that end up giving us problems in our business. And I'm going to highlight 3 mistakes that we have, that we make, or I've seen many businesses make that they can do better. And one of them is not applying the separate entity principle, which is the concept, accounting concept number 1. If you've registered your business legally, and I hope you have registered your business legally, what happens is the business is a legal entity. It can sue and be sued as a person. You also, the business owner, you're also a person. Now, the separation, we were having a conversation, I think, during the Global Entrepreneurship Week. In one of the sessions, one of the people was saying, no, it's very hard for them to separate themselves from the business because it is their money and it is going into their business. But then from that discussion, I realized the separation actually starts from the mind. You have to mentally separate yourself from your business. Once you separate yourself mentally from your business, then the actual physical and financial separation actually is much, much easier, okay? So if you see that your business, because it has a business name, it has a trading name that is separate from your name, just know that all the money, all the resources that belong to that business belong to that business. What belongs to you also belongs to you. When there's a transaction or an exchange between the two of you, then that has to be done what? Has to be recorded, okay? So for example, you find that many people during COVID time, and even before, there are many people who start their businesses from home. When you start your business from home, do you separate the expenses that the business is running, is incurring by the virtue of it being at your home, or you do not separate that? Because if you do not separate that, you'll not notice that actually, for example, you're baking. Your utility cost, your electricity cost might go high because you're baking from home. But if you're not tracking that as a business expense, you will be having your home expense go higher by the what is this called? The utility expense that you need to run your business. Yet, if you track that in a business, it will help you to even price your products properly, okay? Because you might find that someone who is running from home, their products, their services are priced cheaper. Why? Because they have not considered all the costs of running their business. They're not considering the cost of rent, the cost of utility, the cost of whatever it is that they use in their homes. So that lack of separation means that the day when the business grows and wants to have its own premise, they actually cannot afford to have their own premise. I've had an opportunity to mentor some businesses at the Makerere Food Technology Incubation Center, and also some at Uganda Industrial Research Institute. And you find that these are incubation centers which have a short lifespan. You're supposed to be there for either 2 to 3 years. But you find a business had been there like for 5 years, and they're like, why don't you move out of this place and create space for other people who need the incubation space? But then they're saying they can't afford the rent elsewhere. Why? Because they're thinking in these 2 or 3 years when they're there, they would have saved up some money to be able to get their own premise. But because they're underpricing their products, they're not able, therefore, to set some money apart for them to be able to be self-sustainable. So they stay in the incubation centers, they stay in those different premises because they cannot afford to move out by themselves. Because they're not covering their cost of running the business, what will happen is that they underprice their services. There's underprice, most of them sell goods. They underprice whatever they're selling. They're making yogurt, or they're making cookies, or they're making whatever it is. They underprice them because they're not paying for the machinery, they're not paying for the research, they're not paying for the equipment, they're not paying for the space where they're utilizing and all those different things. So they're totally dependent on the incubation center. So let me give you a story of Zadok Associates. When we started it out, 17 years ago? We started, of course, from home, one of the bedrooms at home. But even at that time, when we started it from home, I costed how much would it be to rent that room? If I was renting that room outside somewhere, how much would it have been? And I'll factor that in the costing of the business, so that eventually, later on, when the business was able was looking for a space, I know that, okay, this business can be able to afford a rent premise of this amount of money. And we were able to easily move to a physical location that you could afford, okay? So if you do not separate yourself from your business, then you stand the risk of being totally having the business depend on you, the business owner, or you can also be vice versa. I usually tell people that there are 2 things that can happen when you don't separate yourself. Either the business runs you broke, or you run your business down. One of the 2 things will happen, okay? Mistake number 2 that happens is that we do not keep proper books of accounts. We do not do proper record keeping in our businesses. You're thinking, oh, it's my business. It's none of anybody else's business. But the fact that you've registered that business and it has a business name, it is everybody else's business. It is Uganda Registration Services Bureau's business, because now they have to know what's happening in your business. It is URA's business because they have to follow you up for taxes. There's so many stakeholders that actually are affected by your business. But the essence of record keeping is it helps you to know, is my business actually growing? If it is growing, by how much? Is my business actually able to go to the next level? If so, how then do I take it to the next level? Now, by record keeping, what do I mean? It is not something complicated. It's as easy as every day you open your enterprise, you write, what is the money that has come into this business? What is the money that has left this business? Whatever it is, that whether it is you who has put in the money or the business has generated from the sales that it has made, expenses, whether it's been incurred by you, the business owner, or by the business itself, all that has to be recorded. Because it is in the recording that will go to the next step, which is analyzing and therefore making proper business decisions. Now, I've seen many business owners who are, we call them number phobic. They don't want to look at numbers. They just see numbers, they go blank. But you don't have to have number phobia. What happens is the analysis that I admit can be complex, but you don't have to do the analysis yourself as a business owner. If you keep proper records, you keep proper bookkeeping, you can actually give that information to an accountant to actually put the information together, analyze it, and tell you the
Hi, Lilian.
story behind your numbers.
But okay, you some businesses Lilian.
Say, I want to now. I'm frozen.
Yeah, you froze for like a minute.
Okay.
So could you backtrack a bit?
Okay, what was I saying? So I sell QuickBooks accounting software, and you find someone says, okay, come and help me automate my accounting system from a manual one to an automated one. Then you're asking, okay, so where are your transactions? They are all in the head. Now, they bought things, they bought a computer, they can't remember where they bought it, how much they bought it. They paid someone, they can't remember all those details. And it's very hard for you, therefore, to do what? To help this person to automate their system, to help this person to be able to know how their business is doing. But if all that record is done, all that information is put down, it's very, very easy for an accountant to come and put that together for you, but also help you to understand how your business is doing. Now, what URA does, they can come and walk into your shop, assuming you're selling, I heard you saying someone is selling uniforms and stuff like that. If you're selling clothes, your shop is stocked, yeah? A URA person will come into your premises and say, based on the stock you have, based on how your outfit looks like, I think your tax obligation is this much. The only difference that you have is to tell them, actually, these are my records. This is my actual performance. With the lack of actual records to prove to the tax authorities anything, I've seen many people pay taxes that they're not supposed to pay. They have what they call presumptive tax assessment. Based on the person coming to see what they imagine is happening in your business, then they assess you a tax that sometimes is really, really very high and unreasonable. But I've also seen business owners who, based on the records that they are keeping, it becomes their defense to pay the actual tax that they need to pay. So ladies and gentlemen, if nothing else convinces you to do record keeping, let me tell you, it can help you to save unnecessary taxes that you do not have to pay, okay? But also, it helps you, if your business grows and you want to invite other partners into your business, it helps you in valuing your business. If it reaches a place where maybe you also need funding from an external source, the record keeping that you have put is what convinces the other party that actually you're worth being lent money, you're worth being supported in whichever way. The third mistake that most of our businesses do is not understanding financial statements. Yes, we are thinking numbers. But without going into so many details, just choose the key things that you really need to understand, the key things that you really need to always be looking out for without breaking your brain. But what are the most important numbers for your business? That someone cannot cheat you out of those numbers. It is very, very important for you to identify those numbers and what they mean to your business so that you can track them either daily, weekly, or monthly. And some of them are really the key ones, so that you don't have too much detail. The key financial statements that you need to look at is your income statement. This one basically tells you the money that comes into your business, the money that leaves your business in terms of expenditures. The difference between the income and the expenditure is what we call a profit. If you made a surplus, if you made a deficit, we call it a loss. Now, just knowing the top line and the bottom line is very, very important for your business. Another key statement that you need to ask for your accountant to give you if they're not giving you is a balance sheet. A balance sheet is just telling you the position of your business. What are the assets that you own? What are the liabilities or the people that you owe money? And if you were to pay everyone that you owe money, what will be your situation? Will you be having a positive or a negative net worth? And I'm going to go into detail a bit more on that later on, but also your cash flow statement. I went for a board meeting one time and the board member was asking me, now this income statement or profit and loss statement shows that we have made a profit, but the bank account, there is no money. We're actually running on an overdraft. How do you explain that? How have we made a profit, but we're running on an overdraft? Being able to understand why you can be in a position of a profit, but also be broke at the same time is something that every business owner should be able to to seek to understand, that there's a possibility that you have a very profitable business, but very broke. But also there's also a possibility that you have a very liquid business, has a lot of cash, but actually it's loss making. It's a very intriguing phenomenon, which I think every business owner should be able to understand. But you cannot begin to understand that one without having the records that support that information. So I go to this particular business, and how did I go to that business? They borrowed money from someone who does working capital financing. And so They borrowed actually 17 million only. And this person who gave them the money said, you just wanted to go and help them with their systems and everything. So I go and ask them for their financial statements, and I'm looking at their debtors, the people who owe them money, the debtors, the accounts receivables. I think debtors is an easier language to use. They had 500 million worth of debtors. In my head, I'm thinking, why don't you just call a couple of them and you get sorted? Why do you go borrow a loan of 17 million? But do you know the truth of the matter was they were not doing proper record keeping in their system. So what was happening is that every time someone would ask for a quotation, the person who was in charge of accounting was raising invoices. Now, when you raise invoices, it looks like you have these people who are supposed to pay you money, but they're not paying you money. But because the business owners were not understanding that there was something wrong in their record keeping, they were there being told that, yes, you've actually made a profit of this much, but they were seeing they don't have money. But also, the implication of what was happening to them, because they had raised these invoices that were supposed to be quotations, it means that their profit was very high. And you are rate taxes you based on the profit. So you can imagine the tax liability that they would have based on wrong data capture, wrong data entry. So resolving that, I'm thinking if the business owners understood that the accountant should have given them the report every month, the report of data, then they would have said, no, this person doesn't owe me money. No, this one don't owe us money. It would have been a different conversation, and they would have arrested the situation much earlier. So as much as accountants do their bit, you, the business owners, have to understand what should you look out for. What should the accountant give you? If they give you something saying you made a profit, what is the backup of that? If they give you something that shows you made a loss, what is the backup of that? If we do not do that, then we end up having problems. So the accountant will give you something like this, which I don't want to go into detail of that. In case someone is number phobic online, they might just log off. But they'll give you something like that, really. 3 statements, I've just put them together to show you that they're actually related. So the upper part is your income statement, which shows the money that comes into your business in terms of sales, the expenses that you incur to generate those sales, and the profit that you make at the end. This one connects to the balance sheet, which shows now the sales that you made. You might have made some of them on credit, and that is why you have what we call receivables or debtors. You should be able to track that on a monthly basis. But also, you should be able to see, okay, what is the relationship with the profit that I made and the money that I have in the bank? I'm not going to go into these details before you log off because of that. But the summary is those 3 financial statements are actually related, but for different purposes. Some people tell me, I keep my records, I just keep my profit and loss, and they're happy, they're done. But unless you're a kiosk that only buys things cash and sells things cash, you cannot depend on a profit and loss as the only statement that you have. You need to track who are the people who owe you money, how long have they owed you so that you go follow them up, who are the people you owe money so that you can plan to pay them at the time that you've agreed to pay them, okay? So that's a summary of the different statements. If you want the details, in the interest of time, it will be shared. I'll share the slides. But I just wanted us to go into the practical ways, because that's the aim of this session. Some foundational issues that I've seen the challenge that makes people not separate themselves from their businesses because they do not have a separate bank account from their business. You ask someone to, it's in my business, one of my business, more and more. So I have different suppliers. Of course, some of them are informal businesses and everything. And you tell someone, okay, I need to make a payment to you. And they give you the bank account is different from the business. I mean, the name of the account they're telling you to pay them is different from the name of the business, which they gave you the invoice. They're like, so these are 2 different things. Like, oh, I don't have a bank account for my business. And that is one of the main problems, that people are not opening a separate bank account for their business. And so the funds is all mixed up. And now when it is all mixed up, it is very, very hard for you to be able to do what? To separate yourself from your business. You should have that literal discipline of when I started out more and more, I started also as well from home about 7 years ago. And I'll literally have separate envelopes because people come and buy the plants from home. I'll actually have envelopes before, because when I was starting out, before I registered the business and opened the bank accounts, I'll literally have envelopes for keep this is the money for more and more, and I will not use it for anything else. So when your business, of course, is small, you do the envelope thing. But when your business, of course, has grown, you have to open a bank account. The moment you've registered your business name, go and open a bank account, and then you start trading. The beauty of having a bank account separate from yourself, it means, therefore, you'll not be shy to give an accountant your bank statement to do the bank reconciliation for you. But when your bank account is also your personal account, you'll find that is the reason people do not end up doing proper books of accounts, because they're shy to give their bank account details to an external person, because it has also your personal affairs within the statement. So one of the practical ways to help you separate yourself from your business is to open a bank account that is different from yourself. The business should have its own bank account, and yourself have your bank account. And for those of you like me who have multiple businesses, each business should have its own bank account. So I was in a coaching session with a particular lady, and she's like, I'm really doing badly. I have 3 businesses, but I'm broke all the time. So I said, okay, so you need to find out which of the businesses is making you broke. So do you have separate records for the different businesses? No, it's all mixed up. Do you have different bank accounts for all the businesses? No, it's all mixed up. Now you don't even know where to start to disentangle this person. Because when you're running 3 businesses, you need to know which of the business is the cash cow, which of the business is the one that is eating from the other business, which is the business that you can actually groom and have potential. So if you have more than one business, still open separate bank accounts for each of those businesses. As I said about record keeping, the beginning of record keeping is having what you call source documents. Source documents are simple things. Receipt book. For every sale that you make, you have to write a receipt. For every expenditure that you make, you have to write what we call a payment voucher. Because the payment voucher will say, I paid so-and-so for this and this, and how much it is that you paid, and the mode of payment that you did. Because when you have the source documents, someone, an accountant, an external person can be able to put that information together and give you financial statements. Someone said, in case your office was burning and you had a file of source documents and you had a file of your financial statements, which one would you rescue? You rescue the source documents, because you can always reconstruct your financial statements from the source documents. Okay, so they are very, very important, but also they form evidence for the taxpayer, for the auditors. The source documents is what helps you in terms of taxes and also in terms of audit. But also, foundational issue that you have to do is to receipt all sales and all incomes. Because when you receipt all sales, you're able to track that actually all this money is accounted for, and none of the money went into tomatoes by mistake. I was having a conversation with someone the other day, and then they said that the money got lost in the tomato money. I was like, which is the tomato money? So if you don't separate yourself from your business, you'll find your sales disappearing in the tomato money. So you have to receipt all your sales, everything. Like you have to literally write a receipt for all the sales and all the incomes that come into your business. When I say income, means you, the business owner, sometimes might lend the business money. You still have to receipt that one as well. So don't just receipt the sales, also the money that you, the business owner, has lent the business, because that way you need to know, do I need to pay myself back? How much money do I pay myself back? The next thing is to bank all your sales intact. So at the end of the day, so one of the rituals we have for more and more, which is because we sell on a daily basis, at the end of the day, they balance the sales for that day. At the end of the day, all the different outlets, we have 3 outlets, each of them balances the sales for the day. And the next morning, the accountant banks all the sales, like really, really all the sales. Because if you do not do that, what will happen is there's a chance that if your team or your staff members know that we don't bank all the sales, sometimes they help themselves with the money that is there. But also banking and the bank, okay? Because it shows the bank your potential for generating cash, your potential for generating liquidity. I have got funding. It's called what? Unsecured loan from the banks. But why would they trust me to get a secured loan from them? Because they know the liquidity potential that I have as a business to be able to pay back the loan. So one of the businesses we're helping to set up together their system. So I set them up in QuickBooks, and then we go through, we've done all the transactions, I put in, supporting the accountant to do that. Then we reach the place for doing bank reconciliations. This is about 10 years ago. She had made sales that month of 30 million. But the money that reached the bank was only 3 million. Like the whole month, the money that reached the bank was only 3 million. But the sales that they made were like 30 million. This particular business was actually borrowing money from a loan shark at a very, very high interest rate. And I told her, do you know, if you're banking all your sales intact and your liquidity, your sales that you're banking is like up 30 million or so on a monthly basis, the bank can actually give you unsecured loan at a very, very low rate. I think at that time the loan sharks were giving, is it 5% per month? Per year, that is 60%. The banks at that time were giving 24% per annum. Now compare getting a loan at 60% per annum, that is a lot of your profit that is, going into paying loans, and getting money from a bank at 24% per annum. But because we do not bank our sales intact, we do not prove to the bank that we have the potential to pay this particular loan. So ladies and gentlemen, one of the ways of getting cheap loan, relatively cheap from the loan sharks is getting money from the bank. But the bank can only trust your ability to pay by you proving your historical ability to generate the revenues. So the bank will ask you, show me your show me your bank statements for the last 6 months or the last 1 year. Show me your financial statements, your income and expenditure statements for the last couple of years. Based on that information, even without a land title, you can get a loan from the bank. It's as easy as that. As easy as keeping your records gives you ability to secure cheap financing because of that. So when you bank all your sales intact, it actually builds your CV with the bank, but also helps you. We had an incident which was very unfortunate. So I do a lot of trainings, like now I'm online, yeah? And so if I'm online, even if my staff call me now, I cannot pick. Actually, one of them was calling, that's where the internet interrupted. I cannot pick the call because I'm here. So I'm in a meeting, I'm running a training, and I couldn't pick the call until 12 o'clock is when I pick the call. So I look at the message they're sending, and they're saying, I've sent 400, that's the only money that is remaining. And I'm looking at the conversation, I'm not understanding this conversation. You sent 400, that's the only money. She sent this message like around 10 in the morning, but I'm reading it after 12. And she's saying, I've sent 400,000, that's the only money that is remaining. So I'm calling to ask, what do you mean you've sent 400,000? To who? I was like, the person said that you said that you're busy, I send them the money. And I've sent them 700,000 so far. And in my head, I'm thinking, I've never told you to send me money. So how do you, no, the person said that Madame has said she's busy, but send money. So anyway, how the story went is like the person called, someone had called me before I started the session, and I told them, no, you call the shop, I am busy. They took advantage of that. So they called the shop and said, they said you sent money. So they had asked for 300,000, which the shop attendant sent. The money, the message came like as if from my number. With the screenshot, it looked like it's from my number. On their phone, it looks like the message comes from my number, but on my number, there's no conversation with the shop. So the person asked for 300,000, which they sent. And then this conversation went like, okay, you send for me more money. So the lady went into the cash box, and there was only 400,000 remaining. So now she sent the 400,000 and said that is the only money remaining. Now imagine if you hadn't done the banking by that time, she would have sent millions of money in the morning. So you see the beauty of banking all your sales intact. So we only lost 700,000 by 10 a.m. in the morning. But if you hadn't done the banking of the previous day, it would have been a nightmare. Anyway, I can give you endless stories on that, but I hope I've convinced you to bank all your sales intact. But also the beauty about banking sales intact is that it helps you having the discipline of planning your payments. So what happens, you bank your sales and then you only withdraw money for what you need to pay. So it means that you're consciously and planning your payment. You're not you're not, how do you call it, impulsively paying. Because when you do impulse payment, you'll find that you've made a payment of something that is not very urgent, yet you have something that is urgent that comes up an hour later. So what we do is we bank ourselves intact, and then we have a plan for what needs to be paid. Because when you write down all the things that need to be paid, you prioritize, okay, this is urgent, this is urgent, this is urgent. But there's nothing as bad as paying something that is not so urgent, and then something urgent come, and then you can't meet that obligation. That's how we end up borrowing. We end up borrowing money to meet an obligation that is now urgent, because you spent money to pay something that could have waited for another day or two. And drawings, write them down. Everything is write them down, even if it is written down. And I know, of course, assume you have an accountant, and so all the payments have to go through the system and everything. That's the good practice. You have payment vouchers. But in the event you're outside, you're not at your office, at your business premises, and you have to make a payment on behalf of the company, and you're not near the payment voucher, I actually walk around with a notebook that if I make a payment for the business, I write it down, then I take the receipt to the accountant, and have the voucher written, and I am refunded for that money. But if you do not have a separation, having something that writes that, you'll end up finding you've spent your money on the business, or you've actually used the business money for something else. So having that separation is very, very important. I write down every expenditure that I make out of myself for the business on behalf of the business. But even within the business, there's a payment voucher for writing who has been paid for what. Because if you don't write them down, you'll find that you're paying someone twice. You have shrewd people who will demand you for a payment because they think you're not keeping proper books of accounts, and they'll be like, you never paid me for ABCD. I've had a scenario where someone has asked me to pay them for something, and actually go and I say, on this particular day, on this particular whatever, I paid you this. And also the other thing also is making payments through the bank system, because the bank keeps for you the track of how do you call it, of payments that are done. Now, people would say the reason why they don't bank my sales intact because I have no time to go to the bank and all that. Nowadays, agency bank, they're called agency banking, agent banking, those ones. They're like every corner you turn, they're around there. So you have no excuse for banking your money. Then they'll say, now I have no time to queue and write a check to draw the money. Now, the phones, all of them, you can make payment from the bank to the phone. So now, if you come to more and more, there's someone who has cash there. There's cash for the sales they have made, but that cash sales will never go and pay a supplier. No. So all the suppliers, they have to write the details of their payments, bank account, what. Those who say, I don't have a bank account, give me your mobile money number. I'll transfer the money to you on mobile money. That way you keep a track of who you paid, when you paid them, how much you paid them. And you avoid those people who are sly asking for payment 2 times, okay? Value non-monetary transactions. This is also, why is it part of separation principle? I've seen many business people, especially those who are in distribution. You use your car to distribute, or you use them from here and here. If you do not, it misses out in your books. Do you know what happens when it misses out in your books? Your profit is going to be overstated, and what will happen? You pay more taxes. You actually pay more taxes. So imagine if you did have a car, you would have hired. You would have hired a car, you would have paid someone transport or something like that. So the same way, if you don't have a company car, what you do is track what is called, you have an option for tracking mileage. So you say it took me X kilometers to go to this particular client, and this is the mileage rate you're using, apply for that, and you get a mileage expenditure captured in your business. Because many of us don't track a lot of business expenditures, and because of omitting these business expenditures from our records, we end up having high profits. And remember, taxes are based on 30% of the profits that you've made. I'm not saying it's bad to make profits. Very good to make profits, but you have to make true profits, not false profits. For those who are on social media, whichever social media, your Facebook or LinkedIn, there's a time I wrote an article about false profits due to hidden expenditures. So you have someone thinking, I've made a lot of money, but actually there's so many expenditures that you've just not written down those different transactions. And therefore you end up having your profits high because of that. But also we have to differentiate between revenue and profits. This statement is what started me off on Facebook. I think I joined Facebook, I still remember, on 1st of August 2014. That was the first time that I joined Facebook. And trying to find my way around Facebook, how the whole thing works, I see people in things called groups. So I joined a group, and the group was called, it had a long name. I think it's been abbreviated to FWW something B. FWWB. I think it was Fascinating Women something in business. Now, in this group, people are selling like every day and night. They are busy selling. So one day, I posted and said, you're busy selling, but are you actually making profit? And then I put there, like, how then do you know if you've just made a sale or you've made a profit? And that took actually, unsurprising, I was surprised, it took a turn into a conversation. And John Mugenzi at that time, I think was one of the few friends I had on Facebook, and said, maybe you should be telling us how to differentiate the two things. And I think that's how my writing on Facebook started. So making a sale is not making a profit, okay? You go make a sale of 1 million, but that is not your profit. So don't go and celebrate and wine and dine to the tune of 1 million, because that 1 million of sale, assuming you're selling what I came out with from the introductions is uniform. So you make uniforms, you sell uniforms of 1 million or 10 million, whatever the amount is. There was the cost of buying the materials to make the uniform. There is the workers, the tailors. There's all those, the direct cost of making that uniform. After the direct cost of making that uniform, there is the indirect cost, which is the rent, the utilities, the blah, 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 all those different things. After you've removed all those different things, the balance, if any, is what we call a profit. But some people actually don't end up having the owners of salary. The business owner salary tends to be missing in most of the records that I've seen of businesses. And so you end up thinking you made a profit, but actually you're not, you're just omitting your salary from your records. So learning to differentiate between yourself and between the revenue and the profit helps you make better decisions, because you're not there for planning based on your revenue, you're planning based on your profits. And then you also have to monitor and manage your cash flows. You can get a windfall of money, but then that windfall is not going to last forever, but also not every month will be a windfall month. So how then do you plan and see, okay, this month was an outlier, and so we can't change our lifestyle all of a sudden because of this windfall that has come. But you'll not know that this was a windfall if you've not been monitoring the performance of your business. Because when you monitor the trajectory, to let you know this was actually a one-off windfall, it was Valentine craze that actually gave you the windfall, and Valentine is not every time. It's a Christmas craze, and so having those records that give you a trend, yes, of how your business is performing will help you to manage yourself, the excitement when you get that windfall, that you don't increase everybody's salary, move to a bigger rent space that is not sustainable in the long run. Okay, so it's after monitoring the trend and you see, oh, actually we are consistently increasing our performance, then we therefore can sustain this level of expenditure or this level of indulgence. Best practices: have monthly account reconciliation. And in the process of having monthly account reconciliation, it helps you to see, did you borrow money from the business or did the business borrow money from you? I normally recommend, in the records that you keep, you have a director's account, assuming you're called a director in your business. You have a director's control account, or business owner's control account, or proprietor's control account, whatever fancy name you want to give it. But have that account where you track the money that you have lent the business and the money that you've borrowed from the business. It's inevitable that in the life of a business, you reach a point when, oh, it is 15th and the taxes are 15 million, but the account has 12 million. but you still have to pay taxes on that particular day. Then you find that you have to lend the business the 3 million for you to be able to pay your tax obligation. You keep that record that actually on the 15th of this month, I lent the business 3 million. Okay, now it means the business have the money to pay the 3 million immediately, so it keeps it there showing that they owe you 3 million. It reaches a time when maybe it's school fees or whatever happens, and you, the business owner, is the one now who is broke and you need money. In this case, therefore, you are paying yourself the 3 million that you had lent the business. But if you're not keeping records, you'll find that you're going to withdraw 5 million from the business, but you had lent the business 3 million, which means you've overdrawn 2 million extra. So if you do not have this control account, I like why we call it control account, because at any one time it tells you who owes the other money. It's you who owes the business, or the business owes you money. And also it helps you to determine, are you lending the business money to be paid back in future, or are you putting capital, like you're injecting more capital in your business? If you're injecting more capital in your business, it means that money is there to stay in the business. But if you're lending the business, it means that they're keeping a track of what you've lent over time, and when time comes you need to be paid, it is paid. But also that director's account serves another purpose. So assuming it's end of the month and you're paying every worker their salary, but then the money is not enough to pay you your salary, the cash rather is not enough for you to get your salary immediately. You track it there to show, I have not received my salary for this particular month because the cash flows are not enough. Then when the cash flows improve, then you can be paid. So it means you're not drawing money out of the business, you're actually being paid what was actually due to yourself, okay? But also there's a reconciling of the bank accounts. As much as I said open bank accounts, please don't go open 100 bank accounts. Open the bank accounts that are essential, important for your business. Basic ones is a Uganda shilling account. If you deal in dollars or any foreign currency, open that one. Because what happens if you open multiple bank accounts and did not reconcile them, each bank account that you're running incurs bank charges. Those are hidden expenses that sometimes we ignore. They incur bank charges. At the end of the year, you paid 1.5 million in bank charges of an account that is just redundant, doing nothing. But also, if the accounts are not reconciled on a monthly basis, there's a lot of fraud that happens, And your account might just be one of the conduits of the fraudulent transactions that are happening around. So one of the things that I do, I am conscious, I know how much money I have in my bank account. So this time I was still in full-time employment. So I knew how much money I knew I was having around this time of the month. You know, when you're an employee, your salary is what you're depending on. So you know how you've been drawing it down. But I go to the ATM and I find, wow, I got a windfall. I don't remember who I was expecting money from, because the only source of income I had was salary, which means this money came from somewhere. I go back to reconcile my personal account and I realized that the money that was in my account was my salary for the year before from another employer, like a past employer. So I've got money in my account that is not my money, of course. Okay, it's like my salary of the previous year from another employer. Of course, I called the bank. Having been a finance manager before, I had a relationship manager with the bank, and I called them and I said, looks like I was paid money erroneously. I left that employment a year ago, and so that money is not my money. Now imagine me if I was not someone who believes in doing the right thing. I would have chewed the money, as they call it. But you know, one of the accounting concepts I told you was the double entry principle. For the money to have come into my account, it left for my employer's account. If the accountant there is a lazy one or they don't do bank reconciliations, they will not have noticed that some money, some millions left their account to some other account, and life would have continued. Me, I'll be happy. I'll have got money from, I'll say, God, thank you. You provided manna from heaven. But that business would have lost, money. The essence of doing bank reconciliations. Because when someone gets money erroneously, it has come to someone's account. I had an unfortunate incident. A friend was put to CPS some years ago, and we went to see him, and he said he was put in CPS because 247 million had gone through his account. But the guy was saying, me, I've never seen such amount of money. So I asked him, so how does the money go into your account? Like, I'd opened an account, but I used it like more than 2 years ago. Now, the people who do fraud and money laundering, they target idle accounts. So the money went through different idle accounts until it is laundered to wherever they want it to go. So if your account is idle, it can be used for money laundering. Anyway, let me not digress on that. I'm just telling you, reconcile your accounts because it can be accounted for anything. But track the things that you own. Track the things that you own as a business. Because it is in the tracking the things that you own that you know the position that you have as a business. But these things that you own them, how did you come into owning them? Did you get a loan to own them? Or did you buy or pay, or what did you acquire them from the savings, the reserves that you've had? Because if that is not the case, what will happen is you have a lot of assets, but these assets were acquired by loans. You end up reaching a situation where you're asset rich, but cash poor. Or you end up having situations where you hear the richest man in town is so-and-so. Then the next time they are bankrupt and you're like, okay, so how do you be rich and bankrupt? Like at the same period. But because you have a lot of assets, which we call riches, but these assets were backed up by what? By loans. So if as a business, you're not tracking your assets and your liabilities, you reach a place where you've acquired a lot of assets, but you're very, very heavily indebted that you cannot really manage. And that's why businesses end up being liquidated because they're like, the liabilities are so high that the assets cannot service the level of liabilities they have. So the business, tracking the two helps you to plan and be deliberate. Like even if we are borrowing, our borrowing threshold is this. We should not go beyond this. That we do not borrow beyond our assets. We do not borrow beyond what we can comfortably pay in case everyone comes say, pay us what you owe us. So you have to track your net worth every so often. And that is your assets minus your liabilities. Those are your net worth. On a monthly basis, review the monthly management report. This includes the debtors. So that's what I was telling you of this client who had 500 million of debtors. If on a monthly basis they're checking their debtors, they will not have reached that situation where they are having 500 million of ghost debtors, so to speak. So on a monthly basis, you see, okay, are these debtors real? You check that. But also the people who you're supposed to pay, the suppliers list, are they real suppliers? There's some people, there's a particular client I went to, and they were paying things. And one day, so because now I started helping them in their financial situation, like setting up their systems, we discovered that some people will just supply them and send invoices and be paid. Like if I'm broke, so let's say I'm a supplier of uniform and I am broke, I'll just go to this particular school, supply them uniform, because as long as an invoice comes, they pay it. So by the time I went there, I'm like, but you guys need all this stock of uniforms. What is your system of determining whether you need the uniforms or not? They didn't have a system of determining whether they need the uniforms or not. So anyone who wanted anything, they will supply and they will pay because they had the money. But then the challenge is they had so much stock that they did not need. They had so much money tied up in stock. Then they started having overdrafts to run their business. Okay, so reviewing the monthly accounts helps you to understand, is my business in the right place? Even also, when you review the management accounts, it helps you to see, have you borrowed a lot from your business or has the business borrowed a lot from you? So we go and put together, so one of the clients had a business in baking, juice and stuff like that. So I say, okay, help me to put together my books of accounts. So we put together the books of accounts. We set up a QuickBooks because that's the system that I sell. At the end of the exercise, for that particular year, they had been in operation for a while. For that particular year, they had made sales of 135 million sales. That's the revenue. But they had made a loss of 50 something million. It's like, okay, how do you make all that loss? Yeah. But what was happening is, in looking at tracking their assets and their liabilities, what was happening is this lady, because she was employed elsewhere and this was her side business, every time they'll ask, they say, flour is finished, she just gives money for flour. Whatever is finished, she just gives the money. So this exercise rudely shocked her. She had given 150 million It's not bad to give 150 million in your business, but you have to do it consciously. So when we do that, we did that director's account, the control account, 150 million had gone into the business that she could not explain, like, how did it go there? What did it do? But then from that conversation where she found she had actually made a loss of 50 something million, and her wage bill was 50 something million as well. I'm like, so who are these people who are working that are not able to generate enough money to cover their own salaries? Like, oh, it is my so-and-so who was just graduated and they're still looking for something to do. So yeah, I don't think if they have nothing to do, they should do that nothing at your premises, methinks. But they should be able to add value to make you be able to pay them their salaries. So she actually had to make tough decisions, but because of reviewing the management accounts, now she consciously was saying, oh, this is what I'm putting in the business. It should return me this much money. This is what I am, all those different things. If you don't do that, you'll not notice when your business is running you down or you're running down your business. If you're able to have budgets, I know most businesses don't want to have budgets, but if you're able to have budgets, because if you've been having records for the previous years and so, it can give you a basis for setting up your budgets, but also having a cash flow projection that guides you on how to spend your money. Review your financial statements. As much as you don't like numbers, find a way of reviewing your financial statements, of getting a trusted person who can help you to understand the numbers in your business so that you make informed decisions. Minimum standards you need to have in your business. A valid supporting document for every transaction, whether the money is coming in or going out, have a valid transaction. That is the key point of having a separation of your business from yourself. The fact that you know that you put money in the business, they give you a receipt. You remove money from the business, they write a payment voucher and write the story behind where you're removing the money from the business. But also another minimum standard is every bank account that you have should have a cash book. The cash book is basically saying this money came in and this money left this particular bank account. And you reconcile that on a monthly basis. Because if you do not do that, your account might be contributed to all those different things that I've given you. Then to be able to analyze and generate your financial statements is what the accountants call the chart of accounts, which is just something simply meaning a list of how you want to track your affairs, financial affairs. How do you record the money coming through? What are the titles you have for the sales that are coming through? What are the titles for the expenditures that are going out? So that at the end of the day, you can say, I spent so much money in transport, I spent so much money on communication, I spent so much money on salaries, I spent so much money on rent. But at the end of the day, you can analyze what is the proportion of my salaries to the revenue, to the sales? What is the proportion of my rent to the sales? What is the proportion of my communication expense to the sales? So that we are not having too much rent or too much salary or too much anything. When you look at figures in their own rights, they might not make much sense. But when you put them into ratios, you convert them into ratios, then it helps you to see, oh, I am paying 50% of my sales in rent. That is actually too much rent. Okay. So when you keep on analyzing that, when it reaches a place where COVID put many businesses where things are tight, then you have to see, okay, which are the expenditure lines that have been driving us really high? What can we then do to mitigate them? But if you are not tracking where your money is going, you'll not know what is going, how do you call it? What is going out of proportion? I remember earlier in one of the firms that I worked, so the MD calls all of us like for an emergency meeting, and you're like, wow, what happened? And he says, he was a British. He said, the telephone costs, the communication costs have gone too high. Communication costs have gone too high, and they're increasingly going high. And now I'm not seeing revenues also going high, in commensurate to the communication expenses going high. So you people are calling for what? Because the calls you're making should be bringing business. So if the calls you're making are not bringing business, it means you're making personal calls. We started having call logs and everything. Like you only make business calls, and we're going to be tracking the calls that you're making. It reduces the communication cost down. But if this business owner was not tracking that, we'll have continued doing our chats on the, what is it, at the expense of the company. Of course, spending more time talking, not being productive, but also the company bearing that burden of communication costs. So that's the importance of tracking that. Then having clearly delegated authority in your business helps you, because to separate yourself from your business and you have someone else who holds your accountant, you have an accountant or equivalent, then it helps you to have some checks and balances in place. They know when you've borrowed money, they'll remind you, you borrowed this money, when are you going to pay it? So I love plants, of course, and I have a shop that sells plants, but I can't just go and pick plants and take home because I love plants and it's my shop. No, I actually pay for every plant that I buy. In the event that at that time when I want the plant, I don't have money, they actually raise an invoice and they actually call me, you have not paid this particular invoice, okay? Because the separation of who does what. So they call me up and say, your invoice is outstanding, can you pay it, you know? So that's good.
Okay.
For the business, that even whatever your business offers as a service or as a product.
Yes, almost. Yeah, we can summarize so we can have some time for questions. We can summarize so we can have time for questions.
Yes. Yeah. So let me wind up by this one. Assuming, you know, like how you have a car has a dashboard. So the car has a dashboard, has like key dashboard that you can't drive your car without knowing the level of fuel. You can't drive your car without knowing if the temperature is okay. You can't drive your car if your speedometer is working. So in our businesses, let us have speedometers in place. A speedometer in your business is the same as your profit and loss statement. It tells you the rate at which your business is growing. But also, let us check our fuel gauge. The way you check our fuel gauge in the car, you don't open your fuel tank to check how much fuel do I have in this car. No, you actually look at the fuel gauge. It will tell you how much fuel you have. So in your business, a cash flow forecast helps you to know the money you have right now and how far you can stretch it, or if you need to refuel at some point in time. And the last important gauge is a balance sheet in your business, which is like your oil pressure indicator in your car. If it is overheating, it will show it is high, and you know I have to do something to cool down the engine. The same way in your business, if you're measuring the loans that you're taking, the debts that you're going into, if you keep on measuring that, and you have something that wants you that, you know, at this level, you have taken too much debt that the business overheat, okay? So let us all have dashboards that tell us the story behind our business, and then we can steer our businesses to the right direction. So at Zadok Associates, we offer what we call the CF phone call services. We help you to put in place a planning and budgeting system, accounting system, financial reporting system, internal control systems, working capital management systems, and also help you to mentor, coach, or even recruit your accounting personnel. But we start that with a financial health check that tells you the pulse of your business. If you need to see a doctor, what is the situation that you have? How can it be solved? Do you just need Panadol, or do you actually need a total surgery? So if you need our services to sort you out in any way, just give us a call. Back to you, Belinda.
Yeah. Oh, yeah. So I was going to ask for the number. So these are the numbers. I know that question is going to come up because we actually have a comment in the chat for someone asking you to come to their premises and speak to them. Okay. Money discussions are quite intriguing. Thank you so much, Lilian. And we are up to a whole tribe of 70 participants. Thank you guys for joining. You joined while we were deep into the discussion about the separation of our accounts, and Lilian has done a good job to help us reflect on that. Now, Lilian, I hope you realize, and I like the fact that you've given us scenarios where you started your business from home and then you grow into something bigger. I would like to think that most of the people on the call, that is the route that they will take. And I like the fact that you have stressed the importance of managing our everyday transactions and to ask ourselves if we are really making profits, and then also the importance of source documents. I also like the issue on costing. I think Enterprise Uganda on this series, we've hosted someone telling us about costing. That is where most businesses go wrong. They do not cost properly. But then what I hear you say ultimately is our businesses need to make money for them to be able to survive. So those are my takeouts. I would now invite people to ask questions. We already have, let's see, you can put up your hand, or you can type your question in the chat. Rashik Iseka, you're saying, thank you, Lilian, for this informative session. Is there a possibility of someone hosting you at their premises and doing a quick audit of their financial management process? I think she said yes, and she's shared her number as well. And someone here is saying, Linda Anduro is saying, Lilian, you are great. You are great. So we have about 17 minutes to the end of our presentation today. Now I know you guys have questions, so you can put your hands up if there's something that Lilian, you want her to go over again. If you have a question, if you need guidance. I've seen she says that she does a financial health check. So let's ask her while she's still here. I imagine if you were to call her directly, it will probably cost a little bit more. But now that we have her, let's take advantage of her time here. And also, as you are here, you remember that Enterprise Uganda is doing the final round of the business health checks. If you want to benefit from that, please sign up in the link. I'm going to ask someone to post the link again in the chat. We'll get someone to come and visit you before the year ends, so that now, in addition to what Lilian has shared with us, you can plan for the other aspects of your business. Okay, the presentation will be shared. Everybody who is asking about the presentation, it is going to be shared. If you're on the forum, we always share the presentation. Emmanuel Musinguzi says, thanks, Lilian, for that information. You spoke about making profit, but running on overdraft, say for treatment for invoices and quotations. Please hint on it more. Okay, so that's the point of, you think you are making profit, but then you are running on overdraft. Lilian, you remember that? You can, someone is saying you throw more light on it.
Okay, so there are scenarios where you can be thinking you're making profits, but you're running on overdraft. Scenarios where you're making sales, a lot of sales on credit, yeah? So you issue invoices, but people take some time to pay you. So which means, therefore, you have to be able to track your debtors and see how long do they take to pay you, and give them terms. If someone wants something on credit, you give them like a cap of, it's giving you 15 days credit or not more than 30 days credit. Because if you do not, you'll find a situation where you made a lot of sales, yes, but the money is not in your pocket. The money is in your customer's pocket. So what will happen is you've made a profit, but because the money is in their pocket, not in your bank account, you're broke. I hope that explains it. Yeah.
Okay, and she did talk about the monthly reconciliations. I think if you do the monthly reconciliations, you will know how you stand with your debtors and your creditors, and that will be able to sort you out on that front. Okay, do we have more questions for Lilian? You can type in the chat, or you can put up your hand. We have about 14 minutes to go. Let me see if we have a hand. Okay, there is no hand yet. What question did I have for you, Lilian? You talked about the bank account, and I think my experience is that I like the innovations of digitalization, where you can push money from the bank to your phone, but that does not happen with corporate accounts. It's for personal accounts. So, and I know you've given us the option of mobile agency banking, but now it's a situation that I usually have, like sometimes I need to bank money and then I need to spend. Yeah, so what is the ethics on that? I need to bank money, but then I need to make a payment. What is the ethics on that? And also, if you have an experience where you know a bank that gives company accounts the opportunity to push money from their mobile phones, I would really like to know which bank that one is.
Okay. So there are two options. Okay, my bank is Absa. So for More and More, it's a business account. It's not my personal account. They have a product called business banking or something like that. And with that one, you are able to pay from the bank to the individual, what is it called? To the individual accounts. Now for Zadok Associates, it has a corporate account, it's not a business account. Now for that one, what Absa does, it has I think it has a separate account that you can have an ATM card on. So what we'll do, like for petty cash things and stuff like that, we transfer money from the main account to the ATM card account. So which means the money that is there is just that money for that purpose. Then you just go to the ATM and withdraw it. So yeah, so you get from the corporate account to an ATM account, which is not, it is not getting money directly from your account. And that card also, it means you can give it to someone that you trust who is managing the cash payments. You know, they will not withdraw anything more than what is in the account anyway, because you've just wired that money for that particular purpose. So we use those two. And even for More and More, we have a card as well. So you have like big payments, so someone insists it has to be, they have to draw cash for some reason. But what I do, I avoid cash payment as much as is possible. I avoid cash payments, so you pay bank to bank. And for those people who don't have bank accounts for Zadok, for More and More, it goes to the different mobile monies. But those who don't have bank accounts, then we push to the ATM card account, and then we do the cash for them. I do hope that helps you. Yeah.
So I need to bank, but then I need to pay.
Yes, so you have to bank, and then so now in the days when people used to write checks, so you go to the counter, that's what we literally used to do. So you go to the counter, deposit, after depositing, you give the teller the check. Yeah, and the money will have hit your account, and they don't charge you for doing that. So you just bank the check and go with the withdrawal check as well, because by this time you know how much money you're actually planning to withdraw. Okay. So you can do it at the same time. Yeah.
Okay, so we have Kigonya Joel has a question.
Say, do you put up your hand?
Hello, Joel.
Morning. Morning.
Good. Yes, how are you today?
Yeah, my question is a little bit simple. When is the profit to Lilian? Just want to hear your say on that.
When is what?
When is the profit a profit in business?
Okay, so yes.
Thank you.
Okay. Joel wants to know what is really the profit. I think you touched on it, but you can still give us some more insight there. And Gabriel Chigos wants to know also banks that have relatively low costs for small businesses. And Audrey Assessora is asking, does that increase the banking cost? I think she said that the bank doesn't charge you, okay, if you deposit and withdraw. One of the banks, the banks that have relatively low charges, especially for small businesses, I'm sure Lilian can share something on that. Yeah, so there was that question on profit. So when is a profit really a profit?
Okay, I'll start with the bank one. So whichever bank you go to, the banks have different packages. They have packages for individuals, they have packages for small businesses, and they have packages for corporate. So make sure that you open an account that suits your situation, okay? So if your business is a sole proprietorship, you can't go and open a corporate account because it has a lot of restrictions for you. So make sure that your bank will have a product for you. And those different products also have different charges because they understand the business. So they have packages for different businesses. So I don't want to bias you for any bank, whichever bank you're banking with, go and ask them which one is the small business bank options. Now for the profit, I put this screen up. Was it Joel? Joel, are you seeing this screen? The upper part, there is income statement, okay? Then revenue is what you have sold, the sales, we call them revenue. Now, you see in this example, this person made sales of $102,000, okay? But to make those sales, they incurred some expenses, the cost of making those sales. We call that cost of goods sold. And in this case, they incurred $39,000. So their gross profit or margin was $62,000. That is just a gross profit. After that, then they remove salaries, they remove rent and other stationary communication, we call that overheads. After removing that, then they remove depreciation, they remove interest if you're paying a loan, and then now it means their total expenses were $59,000. So you see, from the revenue of $102,000, their profit is only, after tax, is only $2,474. You get the difference, Joel? So the person's revenue, the sales they made for that particular period was $102,000. But the net earnings, which is the net profit, is only $2,474. I hope that is clear.
Okay, so I usually tell my very professional people, I ask them, why do you like giving examples in dollars? Yeah, so Joel, so let's use an example of somebody who is so Lilian, you're talking about the uniforms. Let's use the uniforms examples that one of our participants makes. I think what I hear Joel asking, what is really profit? I think it is a costing question. It is a costing question because there is you selling the item, but then you forget the system that creates the item. So we want you to open our minds on, yes, we understand the item because it is visible, you can see it, you have costed it, but now help us appreciate all the other things around that item, the system around that item that should constitute the cost of goods, like you've called it, to make sure that we subtract it from our gross profit and get our net profit, and so that we also don't pay ridiculous taxes like you have said. Yeah, so explain to us that system around the item that creates the item, so that we can also translate it into our own contexts. I think that is what he's really asking. It's the context of costing.
So it starts from the record keeping. Assuming if you follow my advice on recording every single expense in your business, okay? So it means when you went to buy the uniforms, you record that you bought material for the uniforms, you bought thread for the uniforms, you bought whatever it is for the uniform. Then you paid workers to make the uniforms. Maybe you advertised to let people know that you're selling uniforms. And maybe you had to call a supplier to deliver something. That is an expenditure. Maybe you had to pay these people who are making the uniforms, you have to buy for them lunch. These people who are making uniforms, no, for you to write the receipts, you have to buy the books, the receipt books, and all those different things. So just running the operations of your business, there's money leaving your business. Now, when you track all these different expenditures, then you group them. Which are the expenditures that were directly in relation to me making the uniform? So that is the materials, the tailors, the bobbins, the threads, and all those different, those are direct costs of what? Of making the uniform. After that, you track all the other ones, the salaries that you paid, the rent of the premise, if you're renting the premise, the communication costs, the advertising costs, the transport costs, the meals and refreshments, all those different costs. When you remove all those expenditures, then you have the balance there. So assuming it's end of the month, and let's literally assume you have 10 million is what you made as a sale. Assume that's 10 million, you keep on removing, paying all these different people, the balance is your profit. I remember a video that was going around of this lady who had a slice of bread on a plate. I don't know if you saw that video, Brenda. There's a video that was going around of this lady who had a slice of a sliced loaf of bread on a plate. Now this sliced loaf of bread, she paid the suppliers. So I assume you have 22 slices. So she paid the suppliers some slices of bread, and then she paid rent, some slices of bread. She paid salaries. All this is leaving her plate of that slice of bread. She keeps on reducing. Then she paid all those overhead costs, and then she paid the tax person, and then she paid a loan. Then she had one slice remaining out of the 22 slices. She had one slice on her plate, which is supposed to be her profit. Yeah. So think about it like that. So the money that comes in, you keep on removing to pay all those other people. What is remaining that is not touched to, like no one is owing you? Okay, you don't need to pay anyone, deducting all those business expenses. That is now the profit. So
Okay.
it's not the money that comes in, but it's the money that
Yes.
remains after incurring all the other expenses. I don't know if that makes sense.
Yes, I think it is clearer.
And Belinda, the reason I used the dollar is because
Yeah.
the screen, I was referring to
Has
the screen.
dollars.
But you can just assume those are Uganda shillings, because when you put Uganda shillings, the screen will have to be bigger because the zeros are mini.
I
Yeah.
hear you. I was just thinking out loud. Yes, so I
Yeah.
think we can appreciate that, Lilian, and I hope, Joel, you have got the response from her. And now for me, I notice that what most of us will realize is that our cost of doing business is high. If we do the costing properly, we'll realize just how much we are spending on creating our products. And if we don't price properly, then our profit will be low and the businesses will not grow. And then that means every time we come here for business recovery series, we will still have a big elephant in the room to deal with. So maybe actually one of these days, Enterprise Uganda should organize a presentation where we can reduce the cost of doing business, because if we cost properly, I had you touching it of when you do that chart of accounts, you realize that maybe you're spending a lot on communications. Then you ask yourself, how can I reduce my communication costs? I think we need to get there if we are to safeguard our profit, because it is the one that grows our businesses. Thank you very much, Lilian. I don't see anyone.
Belinda, just to touch on that still, for
Yeah.
you to be able to reach that place where you're costing properly, it's record
Yes.
keeping.
Record
Because if you don't
keeping.
keep the records, you will have omitted so many other costs that actually your business incurs and you do not know. So
Okay.
record keeping helps to do the right costing.
Is very critical. Yes, thank you, Lilian. Emmanuel Safari, our usual guest, telling us about insurance there. He shared his number. And Susan, thanking Lilian for the presentation. Yes, so we've come to the end of our presentation today. It's very insightful, deep thought, because Lilian has opened my mind, because I also do business. Lilian has opened my mind on quite a number of things. I hope you also appreciate the presentation today. We will share the presentation with you, and Lilian also posted her number. Please do call her so that you can get an insight on how to do these things, because Lilian, most times when we start our businesses, we do the accounts ourselves. And also we need to get to a point where we realize that maybe we need to hand over to a professional, and also we have to make sure that business can afford to pay that professional. All right. So there are so many opportunities to still engage with Lilian. Enterprise Uganda has opened the door for us to reach her. We want to thank you so much for your time today. 5 people have dropped off. We are now 65 people are going before we say a proper bye-bye. But yes, it's been the Business Recovery Series with Enterprise Uganda. Just to remind you that you still have an opportunity to register for the business health check, and it is the last one for the year 2022. Do take advantage of that. If you take what Lilian has shared with us, and you also have an opportunity to do a business health check, you have lots of, what can I call them, lots of armor to structure your business for 2023. Thank you so much for joining us.